Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks. I've got two paper money trades for you today on two high-profile names, both making moves on the upside. We'll look at Nvidia, and then we'll look at Boeing. That's had a nice run lately as it continues to recover. So first, let's get to our Nvidia trade now. Nvidia is an interesting story because, remember, you've got a February 26th earnings event coming up. So the trades you want to put on now, if you're looking for something in the diagonal family, you might want to go, like I did here, to the March 7th expiration, and I bought the 132 call. Now, that 132 call right at the money, although the stock has rallied slightly here today through the 132, but buying the 132, looking at the February 21st, the expected move there of about $7, $7.50, selling the 140 call. 132, 140 call in the March 7th to February 14th. Now, what this will allow you to do is to extend duration. Did I say 14th? I meant the February 21st, I'm sorry. So March 7th, February 21st, next week. That move is $7.50. So what that will allow you to do is to extend duration on this trade into the earnings event if you choose. Now, your first choice is to always take the trade off if it's profitable or whatever you choose. But that's why you don't want to necessarily put on a trade in the February 28th expiration. Go past it to March 7th and then before it with the opportunity to extend duration into that event expiration. So the risk on this trade, I put it in around 760. It's trading 840 now. So again, these names are rallying here as you see. Nvidia's been rallying. The market is rallying. Remember, the anticipation is starting now as it gets closer and closer to that earnings date. It's trading about $8.40 now. That's the risk on the trade. Whatever debit you pay on a call diagonal is the risk on the trade. So lining up the expected move to February 21st with where the stock is right now, it was about 132 when I put this trade into the system. Now it's about 134, almost 135 and change. So there, the call diagonal, the risk on this trade is the debit paid, and you're looking for a move to the 140 strike, that short strike on the call diagonal. All right, let's get to our second trade now, and that is Boeing. Now, if you look at Boeing's numbers, very quietly, Boeing in the last 3 months is up 29%. It has rallied off its recent lows. The 1 month, 12.75% in the last month. So it's moved from about 137 to 187 in Boeing. So big moves here in the last couple weeks, a month, and the last couple months. So again, the trade we looked at here, both these trades have bullish tones to them. So if you're not bullish, these are not the trades for you. The paper money trade I looked at here is a March 14th, giving yourself even more duration here on the long side. Buying the 190 call, which is just a few dollars out of the money actually. Why? Because I gave myself more duration, so I moved that strike out a little further. Buying the March 14th 190 call, selling next week's February 21st 195 call. We put that in about $4.50. It's currently trading about $4.55, right pretty close, within a nickel of where we put that in. Now, again, with a call diagonal, you're looking for a move towards the 195 strike, currently trading about 187 and change. So you're looking for a move. Next week's move, if you look out to February 21st, about $7.50, right in line. We have the short strike lined up pretty exact to the expected move, and then we bought the 190 call, giving ourselves some duration. Could you buy the 185 call? Yes. It would cost you more money, though. Can you move up that expiration? Yes, you could. Both those would save you, the moving the date up would save you some money on the net debit. Moving the strike down to 185 would cost you more money. There's ways to make it more expensive. or less expensive, moving around the dates, moving around the strike prices. But the 190, 195 call diagonal, the risk on the trade is the debit paid 450. And again, in the next week, 9 days, you're looking for a move up towards the 140 strike. That is the expected one standard deviation move in Boeing. So that's our show for today, everyone. Have a great day. We'll see you tomorrow, Friday, with another edition of Daily Trader. I'm Kevin Hincks.